Thank you so much. Yeah, the mic seems to be working. Very good afternoon to everyone. Thank you again to all the panelists and the audience for listening to us. We have the privilege of having a very, very diverse group of panelists talking about capital markets, investments, growth, and outlook. I remember I was here the same time last year, and when I looked back, there was blue ocean. Mandeep has now transported me to Rajasthan. I'm now lagooned somewhere. So this continues to be a complex subject, and I'm really pleased. We have capital providers. We have permanent capital. BK, he can be a very very long-term investor. We have REIT. We have private capital and managers, and we have debt providers. So right, really nice panelists. So let's see what we can get out of this. And let me just start this morning with you, sir. We heard this morning you've signed another 7 properties or 6 properties with IHCL. You want to get to 2,500 rooms in hotel sector. So obviously you're very bullish about this sector, which is very evident. I think the whole room is bullish about it. But I want to ask your perspective. You are invested in India, and you have investments in hospitality in several other countries. So how is it different? Would you want to double down India, or will you also double down New York and Maldives? And how's the hospitality sector looking for you from different perspectives, purely from investment perspective?
Thank you, first of all. I'm truly delighted. I want to congratulate Mandeep for putting together a show of this scale, one of the finest. First time to the Hope. You're right. I mean, we are very, very bullish about hospitality in the region in general, including my own home country, Nepal, where out of the list that we read out this morning, we will have 5 operating hotels very soon under the Taj brand. India, I mean, has been a remarkable story for us. Sohail is sitting there, you know, the Fern, which we jointly own and operate, has 110 operating hotels and a strong pipeline. You know, I have no doubts that this is the best time that India in particular and the region has seen ever in the history from a hotel industry perspective, whether you are an investor, whether you are an operator. Now the issue comes where? If you allow me, I'd like to share my perspective. You know, I've been talking offline to yesterday and today, and I've been sharing probably India's economy in the next 10 years may not be tenfold, but the hotel industry will become tenfold in the next 10 years. We are talking about the potentials of mid-scale hotels, where we are in, with a constant degree of upgrade, you know. On one hand, to upgrade the product, on the other hand, to make it slim, trim, technology-driven, managing costs, so that the margins are better delivered. I think that's where we see a huge opportunity. I was telling Sohail that in the next 10 years, I see you do 1,000 hotels. This is the kind of energy, spirit we see here. Having said that, by the same token, you know, there was also some very interesting observations made, which I agree, that India is yet to embark on a real luxury journey. When we say real luxury means what? A hotel that commands a rate of some $1,500 ADR. That's what happens in France. That's what happens in some of the, the hot destinations, anywhere you go. I mean, you know, barring a couple of hotels that our partners have, or probably 1 or 2, you know, the Oberois. I mean, there is really no hotel which commands that kind of rate. So I think the journey for creating destinations of that quality is yet to begin, and this is the time. So I think on both these fronts, we remain very bullish, and that's why the 25 hotel platform, 2,500 rooms in the next few years. And we see that everyone in the industry is going to get part of that rise.
Thank you. Starting on a very, very bullish note. And also what Sir represents is also very permanent sort of capital. They don't think 5 years, 15 years. I think he's been doing hotels and owning them for over 20 years and systematically investing. So obviously they're a very, very diverse group with interest in many other businesses, but they continue to allocate money towards hospitality across the globe, including India. I'll now move on to Ashank. Ashank represents Brookfield, and a very, very interesting sort of group. We had always been seeing, or we were used to in capital markets, seeing offices being bought, retail being bought. This gentleman actually bought out Leela Hotels in 2019. It was the largest private deal done so far, over 4,500 crores. At that point, nobody saw COVID coming, so let's leave that piece aside. But it was the largest deal, so obviously they are also very bullish on the hotel. And I want to ask Ashank, what's your journey been? What's your experience? Are you going to grow Leela, and you see it growing in multiple places? And I also want to ask, just like BK, are you going to take Leela global? We've heard some announcements about Ayodhya, which we are very glad about, but let's hear it from you.
Thanks for that, Shobhit, and thank you for having me in the conference. And it's wonderful being in Goa. I got a lot of dirty looks for wearing a suit on the plane, but hopefully I'm feeling more at home here with everyone else in suits as well. Look, we've been very bullish on India, and we've been in the country since 2014. Really was our first major investment in the country. And in 2019, we acquired the Leela Hospitality Group. And we've been very long-term investors in the hospitality space globally. We have more than $20 billion of assets under management in hospitality. So while this was our first investment in India, we're very experienced globally in terms of the hospitality space. I think, just taking a step back, we've heard a lot of great insights today regarding the luxury market and how that's evolved. Sir just mentioned, how India needs to, the hotels need to re-rate on the ADRs and really reach that luxury segment as well. The way we look at our journey and in Leela as well as just the overall hospitality landscape in India today, I think we've all heard that the customers has really evolved. The customer really wants that experience that, it has to be unique, it has to be authentic, it has to be rare. And I think what that really translates to from an investment standpoint is that the customer doesn't want a commodity product. They don't want something that is commoditized and doesn't add or enrich their life, whether they're traveling for business, whether they're traveling for leisure, whether they're traveling for luxury, for anything else, right? For MICE. So every customer is looking for that unique experience, and commodity real estate or service, is not something that they're willing to pay for. So from an investment standpoint, in the long run, what that translates to is that you're going to start seeing pressure on margins, and you can only overcome that by differentiating yourself in your product and your service and your brand. I think one observation that I've had from my perspective is that over the last few years especially, is that all hospitality companies are trying to address this issue, and maybe we need to take a step back and actually ask ourselves, is luxury also becoming commoditized to some extent? And what can we actually do different? A lot of hospitality companies are introducing multiple business segments, multiple brands to meet this demand of luxury, to keep that customer in their ecosystem. And really, whatever their need is, they're trying to cater to that need of the customer through multiple product offerings. And somewhere, I think the focus has been a little bit distracted. And I think it's very important to keep a very sharp focus on your core business. And I think in the context of Leela, I mean, we've been able to do that really well, where we've had we're very lucky to have a pure play luxury brand such as Leela, backed by a world-class management team, great back-end systems on revenue, asset management, distribution, marketing. So I think a combination of all of that, while it was the largest FDI investment in hospitality in the country at that time and probably still is, a combination of the brand and the combination of the management team and the work that the team has put in has really turned the ship around. And the focus has been on optimizing operations and enhancing the brand equity value. So for us, it's been a fantastic investment. We've more than doubled our EBITDA since our acquisition. We are still committed to growing the brand and the hotels selectively. We won't, go, the commodity route. We'll do it very selectively in the right locations with the right partners. So we still are looking to grow that, and 1,500 crores is a decent amount for us to put that into work for the next call it 12 to 18 months, which we think we can deploy that in. We think there are a lot of opportunities in India itself that still need to be tapped into. But it's a natural extension for the Leela brand to move global, especially because the Indian customer is global today, right? The way we think about it is that the brand for Leela, specifically to your question, has a lot of affinity with the Indian diaspora. And wherever the Indian diaspora is present, we can really create a mark, we can really create an impact using that brand. And curate that travel and curate that experience for them, no matter where they go in the world. So in the near term, I would say, Maldives is something that we have been looking at. Within India, obviously, we're extremely bullish, so that's our primary focus. But I would say the Middle East and South Asia are natural extensions of the brand, just given the flight time distance and how popular those destinations have become for the Indian diaspora as well.
So we hope to see more Leelas as we travel around Middle East and Far East. But quickly, before I move to Raghu, are we going to see a Leela in Ayodhya very soon? I heard some announcements. I wasn't sure whether it's a rumor.
We're very excited. We've partnered with the house of Abhinandan Lodha, and we're very excited, to open a really world-class, hotel in Ayodhya. And I think this is just this, in the previous discussions, a lot of other folks pointed this out as well on spiritual tourism and heritage tourism. And I think it's very prevalent in India. It always has been very prevalent in India, but the offering of luxury hospitality in these destinations, very well curated destinations, has always been absent. So this really, and I mean, look, the government has done a fantastic job. The scheme the Prashad scheme, which effectively they're focusing on almost 70 new pilgrimage sites and heritage sites across the country to really revive the culture that India has always been proud of for so long. So our job is to now step up and provide and supply that hospitality infrastructure. And fortunately, Leela is very well positioned to do that, and our journey starts in Ayodhya.
Good. All the best for that one. Raghu, I'm going to move to you. It's quite interesting. We've spoken to the owners of Leela, we've got owners of IHCL, and now let's talk about Hilton. You guys have 3 operating hotels. I think you're building a few. And you're the only guys who've accessed capital markets from a REIT route. How do you feel? What's your outlook? Are you feeling sort of satisfied, saying this is the right place it should have ended up to? And are you guys growing more hotels within the REIT platform that you guys have set up? Are you going to double down on growth?
Sure. Thank you, Shobhit, and thank you, Mandeep, for having me here in Goa. So first of all, we are 4 hotels, and we are close to around 1,100 keys. When we listed, we had around 240 keys, and now almost 5 years of listing. Almost 5 years of listing this year, we would probably, have 1,100 keys and 2 more hotels under construction. Well, while we are a commercial REIT of 45 million square feet, we still view this business as an amenity business, but we use this business at par with our commercial real estate business to generate return for our shareholders. Of course, as we've heard since morning and for the last 12 months or so, of course, the operating parameters all the hotels are on an upward trajectory, which is absolutely positive. We will continue to focus on developing hotels and mostly greenfield hotels in our upcoming tech parks as the REIT continues to grow. And that's the strategy we'll continue to focus on. But it remains as a complementing business to our larger commercial real estate business.
Understood. Guys, we were just off stage. We were chatting up and I was checking with him what's the performance of the hotel within the whole REIT setup because largely it is commercial. And Anoop, I'd like you to, Raghu, I'd like to reconfirm. You mentioned to me saying EBITDA per square feet of hotel is higher than office. Is that correct?
So
This is really exciting.
Sure. So out of our 1,100 keys, right, we need to understand 3 hotels are under ramp up, and as we are ramping up, at forward-looking data is at par with office rentals, EBITDA per square feet. But again, as I said, gestation period and cost of constructions is not at par.
Yeah, so at this point of time, given where the hotels are, already EBITDA per square feet is comparable to office. If it continues on upward trajectory, maybe you'll beat the office rent per square feet, but otherwise your earnings are quite close.
Well, that will depend on अच्छे दिन or बुरे दिन, so we'll see.
अच्छे दिन आएंगे, so let's stay with that note. Since we're talking about capital, I'll move to Anoop quickly. Nobody can build hotels without debt. We heard IHCL this morning, they're all saying we are net debt zero. It's not the best outcome for you. You want people to borrow. And just as a comparison, I think given this room and the people who are here are all very bankable. I would like to know how do you lend to this group of people given your cost of capital, and what's the strategy, right? Because if REIT is going to borrow in single digit and ICL is not borrowing and somebody else is not doing, how do you grow your business? Anoop, I'm putting you on spot on this one, saying how do you grow that business?
I think I heard a good laugh from Mandeep. But before that, I should congratulate Mandeep for putting himself sand dunes in the backdrop. I don't know, we did Khimsar Fort in 1995. When nobody had heard Khimsar Fort. So that is how we do business. We venture out, we do all type of projects, and there's always a demand. Whenever a promoter matures enough, he has various lending options available. He has equity market, there's a REIT market. REIT is more in real estate and all their hotels are attached to real estate. So that market is there, but there are many individual people who are setting up hotels. They require debt, and that is the market. So everybody has his own space available there. And
so in the Gen Z language, you are funding the startups.
We're not funding the startups. We are also funding the startups.
We are
also funding the startups. So we do all type of business. We do all type, and that is why we have survived for the last 35 years. This is our 35th year.
And so you're saying, essentially you're saying there's place for banks, there is place for NBFCs, and there's all kinds of requirements, and you've been doing, and I'm really proud that you funded this, otherwise this photograph wouldn't be here. So thank you on that one. Savir, you've invested globally across different asset classes. You have great experience of doing this for over 20 years in Credit Suisse. Now you've started on your own, and obviously you're on the dais. That means you are eager to do something in the hospitality business. What's the thesis and rationale? And within that sector, within the hospitality sector, are there any good spots that you like, or good sort of price bracket, saying mid-market, luxury, super luxury? Where are you heading with all this?
Great. Well, first of all, thank you for having me. It's been a long time since I came to a conference like this, but it's always good to see old friends. So really glad to be here. Thank you, Mandeep. I think our thesis is very similar to what everybody said over the last 2 days, which is India seems to be at that cusp of a hospitality boom, which is really driven by the consumption boom that is happening, that I think we're all witnessing over the last year, year and a half. But I do want to put some context to this, and this is, as Shobhit kind of dated me, I've been in the business 25 plus years. This is my 5th investment cycle. I think if I kept the count correct. The more things change, the more they stay the same. And we've seen this movie before. Right now, India's the best thing since sliced bread. This time, it seems it's for real. And I think I will also counter that by saying that the 5 most notorious words in investing are this time it's different. It's not going to be different. Real estate is a cyclical business. It goes up, it comes down. The idea is that do you really see that long-term potential and long-term growth? And do you have this bandwidth and the wherewithal to stay through multiple cycles of real estate? So as we are, we are fairly new in our recent avatar. I first started investing in India in hotels in 2007 when we bought a stake in the Park Hotels business. It's been 16 years and the company is going public now. I'll tell you, our business plan was very different back then. So it takes time. Hotel is, a living, breathing animal. It's an operating asset. It's like actually more of an operating asset than even retail. And you have to get up every morning and you have to think about what your customer wants. So very different than building an office building and leasing it out. And I think people like Anoop are actually doing a fantastic job because they understand that it takes a while for hotels to stabilize, and hence they are, that thinking is not prevalent across multiple banks and NBFCs and so on. But overall, to answer your question, I think it's probably one of the best times to be in India. We see a lot of potential, literally across all kind of segments within hospitality, whether it's mid-market, upper mid-scale, luxury. I think there's very little top-end luxury that exists, as Mr. Chaudhary mentioned. I think there's a lot of scope in that. We have a lot of expertise in that area. My partners actually have a large brand as well in that same space. So the issue right now that we're looking at is that the investable market or the pool of assets that you can invest is very, very shallow. There's just not a whole lot of product to buy. Like if I said I want to put 500 million to work in the next 2-3 years, I can't find the assets, which means that I have to then get into development, which we all know is a very different business, requires a whole lot of skill set that a lot of institutional investors don't want to go into. So it'll be interesting to see how this develops. The other comment I would make is that the market is extremely fragmented. Right now, if you look at it, we're a $4 trillion economy. If you take there's only 5 really or 6 really large hotel companies, and the market cap combined of those hotel companies is under $10 billion. I mean, to me, for a $4 trillion economy, not to have hotel businesses that are sizable, it just makes no sense. And the answer is because whatever assets we have, which is still very little in terms of the overall size of the economy, are fragmented and are owned by individuals. That will change. This market will get consolidated. It has to. But there's a lot of development that needs to happen till we get there. The owners of the hotels typically built them as ego statements. It wasn't, there wasn't always that thought around return on investment when they were building it. So until that changes also, which it is, looks like it's changing, they'll realize that, they're not experts at hotels just because they own the real estate, and they need to bring in the experts. And so I think you will see a lot of consolidation there as well. But from a growth standpoint, I think there's a lot to do in the market.
Sure. I think, I'm going to pick up a few things from you, saying that, we are still sort of subscale as far as investments are concerned. You'd like to put or see more investments going in. Anoop, I'll move the question back to you. Is there enough product on distress? I mean, the whole industry went through a churn when the cycle stopped in 2019. We didn't see so many hotels getting traded while they were the most affected. So is there a view, or am I incorrect saying did these hotels really change hands? Because Anoop also mentioned, or Samir also mentioned, that there should have been consolidation, but it is not apparent. I didn't see it, so let's hear it from you saying what's your view on this. Did you see any distress?
See, most of the hotel companies which have multiple assets, they are moving into asset-light model. So that is why that consolidation is not happening. They don't want to put in their capex there. So that is one thing. Uh, with respect to stress, yes, the stress was there. And prior to COVID also, I think the rates had not grown. There were only single-digit growth in the last 2-3 years, starting from 2002, and that is why that Leela deal also happened. So it was not so optimistic scenario. And at the time, supply was slightly higher than the demand. Then COVID happened, everything collapsed. But then there were certain schemes, and most of the institutions hand-holded the people. And then the industry revived. We all have witnessed that revival. And because of that, operationally, all the hotels are doing pretty well. Financially, yes, there's still stress. And that is why there are deals which are available in the private market. Many deals are happening. I cannot say, despite good operations, they are making money. The ROE for the investor is still pretty low. And why? Why? Because they overspend. So when the industry starts doing well, every operator wants a better hotel at a higher cost. And post COVID, the cost of setting up hotel has increased 25%. The material cost has gone up, labor cost has gone up. So if you are investing so high, either your market should be pretty high. But again, if you are looking at a $200 hotel at a cost where your room cost is 2 crores, how will you make money at the end of the day? I don't know.
So you're saying there's still a disconnect between ROE or ROI and the profitability. You're saying it's not stacking up properly.
Yeah, as a financer, I don't understand the multiple at which the shares are getting listed. I don't understand that.
So we'll debate this one a little bit more.
Just a quick comment on that. And just because where the multiples are on the public companies, every hotel owner who wants to go sell his assets says, I want the same multiple, right?
Yeah.
Which obviously doesn't work in any situation.
But public markets are different from private. So if they want that multiple, by all means, please go list yourself. And if you get it, very good. If not, that's fine. Just one thing, Anoop, before I move on to Ashank and BK. Is there any chance that you can change or increase the tenure of the loans? Already we know that you guys are between 12 to 15 years. Can it move higher than that? Because
we are doing 15 years loans.
Yeah. But can it move to 20 years?
I don't think. Then we require ALM. RBI has to move in and say, okay, your ALM will be entirely different.
But will you stand up for the industry and say we want 20 years?
I can stand up, provided RBI listens to me.
But it will help the industry because the industry sort of takes time to stabilize.
So Shobhit, you have to understand, like any other industry, hospitality industry, where you don't have to hold the asset for long, right? There's a lot of capital appreciation which happens in this sector. Once you feel there's adequate capital appreciation, you must divest and make money out of it, right? Why should you hold an asset to your heart, so close to your heart?
So let's move to BK. Have you ever sold or will you ever sell an asset that you built? We take it straight from Anoop saying, you must sell assets to make money. Is that really necessary?
Before he answers, I will say that if you require money, you should sell.
He's never sold an asset, yeah? So let's hear it from him. Is there any plans of exit, whether private or public?
The typical issue, that people like us land up dealing with. Everyone says that the only time you make money is when you sell the asset. But the simple answer to your question is we've not sold any asset.
That's right.
We have been able to, for some reason, we have been able to stay on with the asset, worked on it, built numbers, and I think learn the trade. I think one should not try to be master of trying to do everything, okay? One has to, I was talking in the beginning when we talked about multiplying the presence in the hotel sector, we got to think about returns. We got to squeeze the asset. You got to know how to do that. Debt has to be kept at manageable level. We ourselves are bankers. We own the largest bank in our country, Nepal,
Absolutely.
recently acquired in Sri Lanka. Difficult countries where interest rates are high. And, and to compete with low-cost money, which is available to certain big groups, particularly in the ASEAN countries. I'll give you a very interesting analogy. When we formed Taj Asia with Taj 25 years ago, the vision was to go to the other Asian countries, like Hong Kong, Singapore, Japan, Korea. And very soon we realized that we wouldn't be able to compete with the guys who are in Hong Kong and Singapore who get 2%, money at 2%, or in Japan for 2% on their balance sheet. And these are the same guys who come and compete with us in Sri Lanka and India. So there is an inherent disadvantage for investors from this part of the world. It's easier said than done. Why, let's say, brands, and well-known brands, Taj or Oberoi or even Leela for that matter, have not been able to make an entry in the Asian market. There is none. Think of it. All the way from Japan, from India, all the way to Japan, there is zero presence of any Indian, internationally known Indian brand. Things are changing in Middle East because the rules of the games have changed. So I would say that going back to your question, whether we like to sell our asset and make money, probably not. We will list, we will scale up, we will develop better EBITDA earnings, and let the guys who run the business sweat for it.
Sweat for it. So you're saying make operational profits, keep everything manageable, use your money responsibly, especially because the cost of capital is very high in the Asian sort of sub-market. Ashank, obviously you've invested. I can't assume it's the same answer from you saying you will hold it forever. What's the strategy for Leela? Are you going to take it public? Is there a plan to take it public at some point? How do you think about exit when you invested in this asset?
Yeah, look, I'll say that as Brookfield, we are very long-term investors in our businesses. And, we are very bullish on India and the Leela story as well. So, we think there is significant upside still remaining in the business. The assets that we own under the Leela flag are irreplaceable. They're unique and they're fantastic locations, fantastic quality. So in many sense, it's actually irreplaceable. The brand, the Leela brand itself, it's impossible to create these brands today from scratch and really reach the pinnacle at which Leela is today at. So this could be a fantastic opportunity for for permanent public capital markets, money to be a part of this story, to be a part of a pure play luxury brand story that's backed by an institutional sponsor like Brookfield. So, it could be on the cards, definitely, right? But it won't be we don't think of it as an exit, Shobhit. We think of it as a recapitalization where we still continue to back the growth story because we genuinely believe that there is a lot more to do, in the Leela story itself.
Like you've done for offices.
Very similar
so
to
you
what we done
buy
in
to
offices.
hold. And just continuing with the point that BK mentioned, cost of capital. Given your pedigree and source, is there an advantage over other operators within India that your cost of finance or cost of capital is any cheaper? Especially from banks. So let's limit it to bank. Saying, are you getting any advantage, saying your cost of money because of who you are? Are you getting it any cheaper than the rest of the people?
Look, I think it helps that we have a track record in the country where we have demonstrated that we are very disciplined investors. So, we have fantastic banking relationships and, we have proven again and again over the last decade plus that, we meet our business plans. We are very disciplined in the way we develop. We are very disciplined in the way we underwrite. So I think lenders are generally more comfortable But every lender is, looking at our business plan and evaluating it on basis of that, and then lending us money, right? So I think there's no real advantage or disadvantage beyond our track record that we have created in this country. Just to, Sir's point about, Asia expansion, I think that's where hopefully, Brookfield will have a slight advantage in the sense that, just given the capabilities of teams and presence that we have as Brookfield in those countries in Asia and, Asia Pacific, it should be a lot easier for us to, leverage that system, that ecosystem that we have created to expand the Leela brand into those markets as well. So that's the, strategy that we currently have.
Thanks, thank you. I'm going to pull Anoop one more time, and this is a question specifically. We have two owners here. One is a REIT, listed REIT, and one is Brookfield. Both of which I know don't offer non-recourse sort of backed loans. So there's no question of giving a recourse beyond the asset. How do you think about it? Because Indian lenders sort of always lean back on corporate guarantees and personal guarantees of the promoter, which are not available at least for this set of group that I know. Will that situation change for others? Right? I don't mean the worst for these guys, but will it change for other single asset owners?
I think corporate guarantees have already ended with the imposition of GST in India. So no corporate house would give a corporate guarantee. Personal guarantees do continue, but it all depends on how much comfort you have with a particular promoter. If you're comfortable, you can do business without any guarantees also.
So you're saying it is evolved. You guys can do lending without
I think
corporate and
Indian
personal
financial
guarantees?
market has matured a lot.
Super. I'm just going to do one last round. Maybe we'll start with you, Samir, at the far end, and then move this side. Given the entire state, obviously hospitality sector is doing really well. Owners like yourselves are really doubling down on the asset class. Consumers are spending or starting to spend more and more. What is it that the government can do to prompt more investment? What is the one ask that you want from the government? Saying, buddy, you've done everything. You built the infra, you got the airlines, you've got the airports, you've built the temples and whatever places of worship. Now please support us in adding more infrastructure, which is hospitality, pure play hospitality. You can't have hospitality districts or places like Ayodhya without hotels. So what do you want to ask? What is the ask from the government? And just one point is fine.
So I think the government has already done everything, and which is why we are all sitting here today. I think you have the infra in place, like you said. I think hospitality already has infrastructure status in terms of, cost of capital as well. I think roads, airports, all of that works. I think now it's really actually up to the industry to kind of step up to the plate. I would say actually in this particular case, the government has been ahead of the curve than the industry. So I think the industry is actually running behind.
So you're saying we have to act more.
Just get out, build more hotels,
build more,
make sure,
more action. Anoop, anything from your side?
I think there are certain states in India who have declared industry status for the hospitality sector. Many other states have not done it. I think there should be one thing that throughout the country, we have an industry status. Infrastructure is good now. I think people have to set up hotels. That's all.
Ashank?
Yeah, I'll echo what Samir said. Ask not what your country can do for you. Ask what you can do for your
what
country.
you can do for the country. That's nice. But industry status is important. Sir, yourselves, you worked in multiple geographies, so you can definitely...
I think actually there are three concrete things that India can afford to do and should do right away. Number one, still the issue of the cost of capital needs to be dealt with. Okay. One way to do that is, as they did for many other industries, they deferred the taxes. Because, giving subsidies, there are many states in India which give subsidies, but that comes after the project is completed. There are unpredictability in doing greenfield projects. Gestation periods can be longer than you think. So that is not a solution. Okay, and for every entrepreneur to put in 100% of the equity till the project is ready is also not a solution. So the government will have to step in to find ways and means of bridging that. Okay, so I think these are the two very critical issues where government should be in. I read something that in this budget, they've asked the local state governments to come up with destinations and support those destinations with the investment for the financing package which the center is willing to match. I don't know how that's going to be dealt with, but that's a good news.
So you're saying some sort of a subsidy to promote investments? Deferred credit. So not really subsidy, deferred credit. So that government doesn't lose. It just gives you more breather.
Like it happened in case of Maruti.
That's right. When Suzuki when was setting up. Raghu, last, not the least, please.
Two things. We do greenfield projects, so I think so the entire approval process, still the amount of time taken for approval and the number of approvals, that just still needs to be simplified, and that's been asked for a very long time. But I think so the other thing is, right, while the government has realized in this union budget the importance of tourism, the government needs to have a marketing strategy for that as well. Whether our country as a destination, whether it is tourism or MICE, is marketed in other parts of the world, I think so that's extremely important. The government needs to have a policy around that.
So you're saying two things. One, speed up approvals and licenses, or maybe even simplify licenses.
Correct.
And second is, as a country, we should market ourselves.
Today, if you go to an international trade show, you will have hotel representations there, you will have travel agents representations there, but you'll have representations from other countries as states. We don't see that from India at this given point.
Okay, guys, on that note, I'd like to just sort of thank our panel. Can we have a big round for our panelists? Thank you so much. I hope you guys have got something back from this panel. And see you outside on the, all the panelists are available off stage if there are any questions. Thank you so much. Thank you.